Hey everyone, this is Paul Yeager, and in today's video I just want to talk to you about the top 3 things you should focus on, or what I like to call the business of doing business. A lot of opportunities, affiliate marketing, network marketing, direct selling, even offline business. Well, however, we'll say offline business, a lot more people are aware of these things. Online business, everyone's focal point is sell the product, make money, and they have no other knowledge beyond that. So the 3 things I want to talk about today are taxes, debt elimination, and tax deductions. If you work a regular job and you're building a business part-time on the side, it's your little side hustle. Did you know that you can update your W-4 at work, and because you're working your own business, you'll have less taxes taken from your paycheck? So in essence, a lot of people increase their job's take-home pay by a few $100s a month just by making that adjustment. It's completely legal and ethical. Because you're also a home-based business owner, you qualify for other tax deductions. And I do say home-based business owner, but even if you're running an offline business, this still applies. If you run a traditional brick and mortar business, like you have your own retail store, but you also work a regular job, you can do this as well. And now, secondly, I want to talk about debt elimination. The number one reason you decided you were going to start a home-based business or a brick and mortar offline business, whole reason you did that, I guarantee you, had something to do with you saw your future and you didn't see enough money in it. So you needed to create another plan. Generate income with a business. So why did you want more money? In a lot of people's cases, a lot of it had something to do with debt elimination, which is the second thing I want to talk about. Debt elimination. You saw that your job was not giving you sufficient enough money in your paycheck to be able to eliminate debt faster. So here's a couple other things. You're a home-based business owner. Now the amount varies, but let's say you adjusted your W-4 and you got an extra $350 per month. Now, if you look at that, instead of, now I will say this, it's your money, in the end it's your money. You can do with what you want, but you have an extra $350, let's say, for demonstration purposes. You are trying to pay off credit card debt, loan debt, car payment. Let's say you were paying $200 a month on whatever the expense. Well, now you have an extra $350 that you didn't have before. You can bump that up. Okay, I'm going to make a $300 payment or a $400 payment on this so I can pay it off in a lot less time. Now you're also running your own business. You generate profit from the business. Go ahead and apply that to some of your debt, because the bottom line is, the faster you eliminate your debt, the more money you have back in your pocket that you can utilize for other things. Also, a very big one that a lot of people don't realize is the tax deductions that you now qualify for, simply because you're a home-based business owner. Or an offline business owner, but either way, even if you are running an offline business, there's a good chance you probably have a website, a domain name, web hosting. All those fees that you incur, keep good tax records, because those things can be written off at the end of the year whenever you file your taxes. Website, web hosting, if you are in the home-based business side of things and you have a monthly fee for products, services associated with the business you're in, that monthly fee, multiply it times 12, that's all a tax deduction. If you are using paid advertising, which is the fastest way to success online or offline, every time you purchase advertising, there's another tax deduction. If you're using the internet in any way for your business, guess what? Internet access, there's another tax deduction. There are a ton. I cannot go over the hundreds of deductions you qualify for in this video. The best advice I'd give you is whoever does your taxes, whoever your tax preparer is. My first year of online business was 2008. I failed until 2011. And the easiest way to manage what's a deduction versus what's not, I mean, because some things you'll get percentages of those amounts deducted, and other things you'll get 100% deducted. The best thing to do is keep track of every expense you have throughout the year and all of your business income throughout the year. You keep records of that stuff, present it to your tax preparer, and they can go through it and show you what's deductible, what's not, what you can get a percentage deducted on. I'm not a tax professional, so that's the best advice I can give there. And also, a lot of people, and this proves my point, that a lot of people trying to make money with a business don't. This is mostly geared for online business, but a lot of people don't realize what they qualify for. I hear a lot of people talk about, I lost money, I lost $5,000, I lost $20,000, I lost $500 inside this business opportunity, whatever it is, because they went out of business, or they screwed this up, they didn't do this or that or whatever. Here is what you need to know. If you're keeping good tax records of what expenses you're incurring for the operation of that business, you're not really losing money, because if you spent $20,000 in business expenses and the business went poof, as long as you remain inside the business arena, that's still a tax deductible business expense. That's $20,000 or $5,000 or $500 deducted from your taxable income. And yeah, I just wanted to make this video to try to open people's eyes as to what they qualify for inside of a home-based business, and even going back to the updating your W-4 form for an increase in your job's take-home pay. Let's go back to that. $350 extra in your pocket a month you never had before. A lot of people say, I don't have money to invest in paid advertising, so I gotta do it for free the slow way. You're completely fine to go ahead and do it that way. Yes, I am in a cemetery because it's quiet here and I thought it was a good place to record a video. Anyways, and I'm very, I got very high metabolism, that's why I tend to keep moving around. But let's say you're increasing your payments toward debt elimination by, let's say, $200 every month. Well, now you have another $150 that you can utilize paying monthly fees or buying effective paid advertising for your business. You know, like I said before, it's all up to you in the end. It's your money. But I get a lot of this from people. I can't afford to buy advertising. Well, what if you had money that wasn't there before? Then you probably could. Or if you just want to gear that little boost in your job take-home pay to freaking paying off all your debts, and after your debts are paid, then you can utilize a whole budget on building your business, and it's tax deductible. So yeah, I know I'm bouncing back and forth from 1, 2, 3 and back to 1 again, but I hope you get some value out of this business. I don't know what I'm talking about now. I hope you get some value out of this video. There we go. And feel free to leave a comment or a question in the comments if you'd like to know more information. Like all that happy stuff. If you're watching on Facebook, like and comment. If you're watching on YouTube, like, comment, subscribe. And I guess that's it for this video, and look forward to hearing from you soon. Bye for now.